I have a very different take.
Okay.
My suspicion is that the conflict on the Gulf and the subsequent increase in oil price acted as a tax on the economy. I believe all taxes are bad. Longtime listeners won't be surprised to hear me say that. But I do believe that the high oil prices extracted a lot of liquidity from the economy. And I believe that the global economy is worse than otherwise supposed. I also know that higher nominal interest rates around the world have increased the cost for speculators to hoard. I have freehold as a 4. If it continues to fall in price as a consequence of lower oil prices, I'll make it a 3. It's probably my favorite oil and gas royalty company. They've been great allocators of capital, and they started with a very, very, very good royalty base at inception 30 some odd years ago. Centaurus I have as a 4. It's in, it's much more speculative than freehold. I do believe that Centaurus becomes a mine. We are in, I would suggest, the boring period now, so it might not be a good place for traders. It's selling at a substantial discount to what I think it's worth, but I don't expect the stock to move until they have announced final permitting and final financing for a build. So it really depends on who you are. If you're a nickel bull like me, and particularly if you're attracted to that deposit like me, which I am, it is something that a speculator should buy, but it's not something that an impatient person should buy. And that final investment decision should come with an awful lot of supporting justification, technical justification. It'll be very useful. Centaurus has been very good in my experience in terms of giving very, very, very thorough, detailed technical presentations. There are some people who don't want to be troubled by that. I am not one of those. I have a very different take.
Okay.
My suspicion is that the conflict on the Gulf and the subsequent increase in oil price acted as a tax on the economy. I believe all taxes are bad. Longtime listeners won't be surprised to hear me say that. But I do believe that the high oil prices extracted a lot of liquidity from the economy. And I believe that the global economy is worse than otherwise supposed. I also know that higher nominal interest rates around the world have increased the cost for speculators to hoard nickel and copper. So the combination of a weaker than expected economy and higher prices to maintain inventories suggests to me that speculative holdings of nickel in particular may have been liquidated in the market.
Okay. Yeah, that would make sense as well. Okay. All right. Rick, your namesake, is saying, good afternoon, Rick and Steve. Absolutely awesome conference. Thanks for all you do for investors. Amazing. He said he read this today. So the sector was handed a soft inflation print, then a second one, then a collapsing hike path, a declining dollar, and a war escalating on the world's most important oil route. It took about $20 in gold, and silver went to a new low. I know you're seeing a slow few months, but what do you think the catalysts are that will drive the metals higher? I think he's talking about gold and silver.
Lower U.S. interest rates, which I don't expect to see in the near future. I think that there is a fairly weak political mandate to maintain higher nominal U.S. interest rates, which will make for a higher U.S. dollar and relatively attractive bond markets. I also believe that the higher nominal interest rates will continue to depress the bond market and ultimately may depress housing market, consumer durable markets. And the consequence of that would be a lower interest rate. I'm reminded, being, Steve, as old as I am, of 1975. We were in the midst of a very strong gold price move from $35 to $200 in the first part of the decade of the 1970s. Inflation became a political issue, and the political class allowed the interest rate to go up in 1975, which cut the gold price literally in half, from $200 an ounce to $100 an ounce. But it did other things too. It cratered the long U.S. Bond market. It cratered the equity market. It cratered auto sales, and it cratered new home starts. The consequence of that is that Congress lost their nerve, and in the end of 1975 caused the Fed to dramatically lower U.S. interest rates, signaling to savers and investors around the world that short-term American politics were more important than the sanctity of the dollar. And that caused gold to go on a romp that over 5.5 years took the gold price from $100 an ounce to $850 an ounce. In this case, I think passes prologue. I think the entire weakness, I shouldn't say the entire weakness, I would say that 90% of the weakness in the gold price is around the relative strength in the US dollar as a consequence of higher nominal interest rates. I think 10% of it is just morons chasing momentum, both ways, up and down. Depends on the explorer. Banyan, I know fairly well. I'm long. Snowline, I know fairly well, and I'm very long. I don't want to comment on the length and breadth of Yukon explorers because they aren't all considered, they aren't all equal. In the case of both Banyan and Snowline, these are large deposits, and they're deposits that will get built. Banyan has the advantage of good existing infrastructure, things like paved roads and power. The Victoria mine is, of course, right up the road. Snowline is much more challenged with regards to infrastructure, but it has absolutely astonishing grade. Both of them have a lot of exploration upside. I'm constructive towards both. I own both in my own accounts, and both of them were present as presenters at our recent Natural Resources Investment Symposium. I would urge people who would like to get to know more about either to, first of all, play the pre-conference interviews that I did with both management teams. They're posted in Rural Investment Media at YouTube or in the Rural Classroom. And I would encourage anybody who wanted to know more than that to buy the recordings of the conference where presentations from both companies took place.
Okay. I'm in. Awesome conference, Rick. Curious if any of the companies had a 1 ranking at the conference. If not, what was the highest company?
I haven't issued a 1 ranking. Probably 6 or 7 years. The last 1 ranking I had was Ivanhoe Mines when the Chinese had just bought a placement in the company at $1.13. The company was selling for 63 cents a share, and it had 90 cents a share cash in it. 1 rankings are extremely rare. I think I was told once that I had issued 12 1 rankings in 35 years of ranking stocks. There were a couple companies at the conference which are due now to be upgraded from 4 to 3. 1 is the highest, 10 is the weakest, not because of any recent information about the company, but simply because the share price declines endemic in the sector have increased the attractiveness of the companies. Understand that the companies are ranked on the delta between price and value. If values stay the same and prices fall, the rankings go up, get better, and that's what's happening. I don't know the Prosper Pine discovery. I know the Caribou deposit fairly well. I think Sean is doing exactly the right thing, just drilling the hell out of it. His corporate motto is shut up and drill. That's a large deposit, but it's a complex deposit, and you really, really, really need a lot of downhole data, which Sean is preparing the market for. I own some stock, but not a lot of stock. Sean's an extremely competent human being, and some of the areas where I see blanks in the drilling data, he sees ore. Traditionally, he's been right, I've been wrong, but I have to follow my own lead.
Okay, Z Salt is asking about Saturn Metals. Are you familiar with Saturn?
Very familiar. They were at the conference. I like Saturn a lot. I own a reasonable amount of stock. The deposit's a little small for me, but I think it gets bigger. There's a valuation anomaly, which is to say that it is underpriced relative to its peers, and is underpriced for a reason that I understand. It's an open pit heap leach oxide target in Australia, and that type of deposit is rare in Australia, so it isn't understood or followed by Australian analysts. It is the type of deposit that's followed and understood by American analysts, but it's in Australia. So it's an orphan. The Americans who understand the deposit won't buy it because it's in Australia, and the Australians who don't understand it, although it's in Australia, won't buy it because they don't understand it. What I particularly like is it's got a godfather in a positive sense. Jonathan Goodman and Dundee are important shareholders there. And I love co-investing with Dundee. I like the fact that they bring more than money. They bring technical support, they bring market support, and they bring excellent access to capital. So yes, I like Saturn.
Cal says, Rick, are you ready to share your analysis of Magotes metal last drill results?
No. I've done some work on it, but the truth is I was exhausted really until today from the conference, and I don't trust the work I did. I am also attempting to get an analysis from Steve Enders, who was a speaker at the conference. For those of you who don't know Steve Enders, he's always a featured speaker of mine. He was dean of the Colorado School of Mines, which is important. But more importantly for this job, he was worldwide exploration manager for Phelps Dodge, then the largest copper company in the world, with a specialty on porphyry. This is a porphyry deposit. And he was also head of worldwide exploration for Newmont. Steve has forgotten substantially more about targeting, about understanding the impact of drill holes on a geophysical target. He's forgotten more than I will ever know. So before I talk too publicly about Mogotes, what I'm going to try to do is, after I've formed my own opinion, get the opinion of others who are. Anytime that you have access to Rio Tinto, it's a very good thing. Rio Tinto was left at the altar by the Lundins and Vicuña. BHP beat them to the punch. It is fairly clear, I think, that the Vicuña district is as important a copper discovery as has been made in the world since Grasberg in Indonesia by Freeport. And I think that Rio needed a way in. The initial drill hole drilled by Mogotes was certainly one of the top 20 porphyry drill holes of my career, one of two good ones this year. The subsequent round of drilling was a bit more challenging. They had a good hit, they had an okay hit, and they had a miss. And allowing allowing Rio to assist them in drilling off that porphyry is a very, very good thing. Drilling off porphyries is not something for mortals. It's expensive, it's technical. The geological team at Rio has probably done it 20 or 30 times, probably more than that if you count the ones they've killed. And it's superb having them in place. It may, but may not, mean that to the extent that Mogotes takes over, you don't have an auction. It's difficult to have an auction with one bidder. And with Rio Tinto at the table, it's sort of like the old analogy of the camel having his nose in the tent, and pretty soon the whole camel's in the tent. But on balance, where they are now, it's a very good thing. I am at real danger of upgrading Equinox from a 4 to a 3. If I had a criticism of Equinox, it's that the last merger that they did was for tactical rather than strategic reasons. There have been no particular operating synergies in either of the last two mergers, the Calibre merger or the Orla merger. They were done for the sole purpose of making Equinox bigger. Now, there's an argument for making it bigger. Larger companies have greater trading liquidity. They get added with greater weight to indexes, so they get more passive buying. If Equinox is able, and I think they will be able, to bring their greenstone deposit to nameplate capacity and use the free cash flow from that deposit to develop their undeveloped opportunities as a consequence of the Calibre takeover and the Orla takeover, you're going to see a real growth gold. In the medium term, what you've done, or really in the near term, is you've created a new major. You've created a new million-ounce gold producer. I suspect that following this amalgamation, what you will see Ross Beatty causing to be done is that the third tier deposits in the company, that part of the inventory in Orla, in Equinox, and in Calibre, that are tier 3 deposits, I think those will be sold and the capital redeployed. I also think, knowing Ross Beatty, that the acquisition spree isn't over. That to the extent that there is the ability to bid for another tier 1 asset, even bidding aggressively, that they will do that. Financed partially, at least with the proceeds that they have sold off. I would expect in the very near term the stock in Equinox to continue to do poorly because there were a lot of holders who held Orla because there was going to be a takeover. There has been a takeover now. One could expect those shareholders to sell irrespective of what they thought about the company's future because they don't think about the company's future. They think about the trade, and the trade is done. The consequence of the operational synergies that I see means that I am in some danger, if the share price continues to fall, of upgrading the stock's ranking from a 4 to a 3. Better informed than I.